TSMC, the top semiconductor company in the world right now, with a market value of $450 billion. However, since February 2022, the stock price has been falling, and it is currently down roughly 50% from its peak. Of course, not only TSMC experienced a loss, all semiconductor firms globally also had declines. Because of this: 1. Falling demand for semiconductors as a result of the recession. 2. Falling costs for semiconductors as a result of weaker demand. 3. Worsening inventory issues brought on by stockpiled stock following COVID-19. 4. Reducing earnings forecasts for semiconductor firms like Micron. 5. A sharp decline in GPU demand as a result of the demise of the cryptocurrency market. 6. Restrictions imposed by the US government on semiconductor shipments to China. Through the fabrication of semiconductors on consignment, semiconductors for high-performance computing and smartphones account for the majority of sales. The majority of chips are those used in smartphones. But the newest information about Apple's weak demand is also a major setback for TSMC. The proportion of each wafer is between 7 and 16 nanometers, making TSMC's technology the greatest in the world. With a 54% share of the global foundry industry, TSMC continues to hold the dominant #1 spot. TSMC, the biggest foundry firm in the world, released its 2022 Q4 earnings. The quarterly revenue increased by 42.8% year-over-year to 625.532 million Taiwan dollars. Additionally, net profit rose by 78% to $295.9 billion. The fourth quarter's revenue and net income, as expressed in US dollars, were $19.931 billion and $9.427 billion, respectively. The high-tech semiconductor division also contributed to TSMC's success. 32% of revenues during the fourth quarter were attributable to the 5-nano process. From 23% in the same time period the previous year, it went up by 9 percentage points. Under 7 nanometers, the share of advanced process sales increased to $54 from 50% 1 year earlier. Sales of 7 nanometers and smaller have been rising consistently. High-performance computing was the industry sector responsible for the fourth quarter's sales growth. Sales in this sector make up 42% of total sales. And 38% of that market is for smartphones. The shares of IoT, cars, consumer electronics, etc. are 8%, 6%, and 2%, respectively. Because development has slowed down, it appears that it has accomplished some really nice results, but the actual environment is not. Sales dropped 1.5% in the fourth quarter compared to the third. TSMC anticipates revenues to be between $16.70 and $17.5 billion in US dollars in the first quarter of 2023. The fourth quarter's revenue was $19.93 billion in US dollars. There will reportedly be a considerable drop, according to the story. Business decreased in the fourth quarter as a result of lower-end market demand and customer inventory changes, according to TSMC CEO Wendell Huang. He continued, as macroeconomic conditions remain weak, the first quarter of 2023 is likely to see additional decreasing demand and inventory adjustments from clients. TSMC, whose revenues will fall sharply the following quarter. Large plants are also being built by it in the US and Japan. The profitability of TSMC will decline if the economy experiences a recession and fabless clients adjust their inventories more severely. It is projected to deteriorate the most in comparison to recent years. Large capital expenditures for plant growth must also be taken into account. Discover more about TSMC. TSMC's advantages. The absolute market position obtained via a lengthy history of foundry company is one of the causes of this. From the moment it was established in 1987 as a foundry company, it solely focused on the foundry industry for almost 40 years. Because of its extensive technical expertise and market credibility, TSMC today controls more than 50% of the foundry business. In the foundry business, which has the majority of the market share, it has established itself as a true powerhouse. TSMC's lines are also used to produce military semiconductors and Xilinx and FPGAs for the US military, in addition to major semiconductor firms like Apple, Qualcomm, and Nvidia AMD, as well as communication modem chips like Broadcom and MediaTek, Taiwanese and Chinese fabless firms like Huawei, and communication modem chips from Broadcom and MediaTek. By doing this, TSMC is successful in securing a dominant position in the foundry industry, often known as the flower of non-memory semiconductors. There may be a number of reasons why TSMC has become such a dominant force in the market, but the first is its strong position as an early entry. Then there is the technology used by TSMC to make this possible. The economy of scale comes last. TSMC has expertise and technology in the foundry process, and it is renowned for its packing technology. The advancement of fan-out wafer-level packing technology is credited with improving semiconductor efficiency and is regarded as crucial to semiconductor packaging. By executing the packaging operation inside the wafer without a PCB substrate, even the cost might be decreased. This fan-out wafer-level packaging technique allowed TSMC to snatch Samsung's supply of Apple's AP from them. Fan-out wafer-level packing was a revolutionary invention at the time. Samsung is developing fan-out panel-level packaging technology, which is thought to be more advanced than wafer-level packaging, in an effort to keep up with the competition. It is true that TSMC outperforms its rivals in terms of precision and ultra-fine processes as well as packaging technologies. The manufacturing process requires knowledge and technologies that have developed over a long period of time and cannot be caught up with quickly. It cannot be disputed that the technological disparity is one of the numerous reasons why TSMC is preferred by so many fabless companies. The final asset of TSMC is economies of scale. In particular, Samsung Electronics is being outnumbered by this equipment, which is the essential component of the ultrafine process and is sometimes referred to as the flower. The potential to generate more semiconductors that reflect the ultrafine process is indicated by the quantity of UV equipment in the ultrafine process, which functions as a barometer. As its foundry business expands, TSMC will have more opportunities. The demand for automotive semiconductors is anticipated to rise dramatically, particularly as the electric car and self-driving vehicle markets are in full swing. As a result, the foundry sector predicts a hard battle to accommodate the rising demand for car semiconductors. TSMC and NXP open the door. The second largest manufacturer of automotive semiconductors in the world is called NXP. The second largest automotive semiconductor manufacturer in the world, NXP, has chosen to work with TSMC to develop a next-generation, high-performance vehicle processor using a 5-nanometer manufacturing process. Many semiconductors linked to automobiles are produced after this. The foundry market is growing alongside the growth of the self-driving car and electric vehicle markets as fabless businesses are anticipated to release the newest chipsets employing ultrafine techniques. It appears that business can make another leap. So, which business stands the best chance of receiving orders for chips for future self-driving cars? In my opinion, TSMC, not Samsung Electronics, is responsible. The first advantage belongs to TSMC, which can use UV equipment to seek economies of scale in ultrafine operations. Large automotive semiconductor companies are anticipated to make love calls. Already, NXP has demonstrated its potential. The growth of AI and the proliferation of data centers are two additional concerns that could push the brave foundry industry. In particular, Intel has announced Fablite. It implies that Intel will supply the foundry industry with a sizable quantity of CPUs for PCs and servers. As a result, we now understand that TSMC, which received attention due to Warren Buffett's investment, is a decent enough company, therefore we should pay attention to the following quarterly profits.